Well, hi everyone. Welcome to another episode of Conversation with, and I'm very happy to have George Sider here from Mastercard. And George is a senior vice president of account management, and I'll let him introduce himself in a second. But for those listening, thank you so much for joining us. For those that have never joined these conversations before, they are what they say. We have a nice conversation, talk about the payment industry, get to know some key folks, and again, we will take questions. There is a Q&A section that you can submit any questions, and thanks for those that have done so beforehand. So without further ado, George, how are you today?
I'm good, Anthony. Thank you for having me.
It's our pleasure. What we like to do is start off by, learning more about you. I mean, to whatever extent you want to tell us, but really, would love to hear about your journey, right? How did you get to where you are? And what's been your experience in the payment industry?
Sure. Yeah. So my payments journey started at an interesting time. It was the fall of 2008. We were on the heels of the financial crisis. I had, in my infinite wisdom, decided to join a financial services company. So my timing could not have been better. Previous to that was at a franchise concept, and my first payments experience was actually launching a gift card. So I had previously launched a gift card and discovered this whole new world of prepaid, which was, uh, you know, completely unknown to me prior to that. Then joined the financial services company in the fall of '08, and they quickly asked me if I could run two prepaid programs, one in the US, one in Canada, fairly sizable programs, and they were general purpose reloadable. So all of these were new concepts to me. I went from a gift card to running GPR programs in the span of a few months and spent the next 10 years of my career working with the payment networks, payment processors, and the sponsor banks, the issuing banks, to launch and grow different prepaid programs. Spent my time working, initially, and I know we'll get into this, but the segment was really focused on the un and underbanked.
Mhm.
So we were considered an alternative financial services provider, and my job was to develop card and payment solutions to support that segment. And so I started in the US and Canada. And over my time during those 10 years, we expanded offerings into the UK and Europe, select few European countries, and had a pretty successful run. And that evolved into the opportunity to join MasterCard in 2018. I came on having never done kind of formal account management. I was always in product and more running portfolios, and was asked to support a portfolio of customers similar to what I was for the previous 10 years. And so I've kind of made my way through MasterCard, and last fall was asked to take on ownership of the account function in the US market for MasterCard for what we now consider prepaid and fintech. So it's been a fun 15 or 16 years.
It's a great journey, and I think we both share kind of this, I'm going to call it personal passion for the space. Having spent over a decade as well in the space, it's great to talk to someone who's now at the forefront. And I know you're managing several very key accounts on behalf of Mastercard, and I think too, it's great. The product background, I think, is actually, to me, it's one of those things where I feel it's actually a good thing when you have account managers that have other disciplines, right? Because they can come in and they can solution right with the clients, which I know you have. So I think it's great. You mentioned gift cards. You talked about unbanked. Let's start talking about what we're here to talk about. I guess is prepaid, and so I know it's a really big category of discussion. Albeit to some people, perhaps they think it's very confined to one type of product.
Yeah.
But I think I actually have a very important question to ask up front. And this is a personal question. Do you get as annoyed as I do when they hyphenate prepaid? Like, or is
Yeah.
it just me?
Yes.
Okay, no, I just want to make sure, just checking. But all kidding aside, I think would love to talk about the kind of your perspective on, you started in 2008, which to me was actually pretty much where prepaid. I mean, prepaid was around before, but I think, you really saw some growth of some key companies and saw some grow pretty extensively, right? like several such as Green Dot, Netspend at the time, right? So love to hear your perspective on kind of like what was going on then and kind of like, as we talk through where we are now.
Yeah, no, when I got involved in '08, it was really interesting. It was very much a kind of a hidden, almost nuanced segment that no one really completely understood. There were a handful of people that really knew how it worked. I quickly tried to align with those people to make sure that I was, best prepared to do my job. And at the time, it was really, look, there's a percentage of the population, pretty significant percentage, almost a third of the population in many of the markets that we served that were underserved or completely unbanked, and they did not have means or access to electronic payment. And that was kind of where it started. And, one of the things that candidly got the attention of senior folks when I was at DFG for 10 years was just the economics around it. It was a really interesting new line of revenue that really wasn't there before. And it could also kind of be interconnected into other financial services products. So I think that's where it became really intriguing. And then there was the opportunity to work with, networks like a Mastercard and enable new products and stand them up. So when I got involved in '08, it was very much how do we serve this segment that hasn't been served by traditional banks? That was the entire industry. And so we geared the products towards how we could do that. Enhancing their payments experience, making them feel financially included, providing financial tools, digitizing the experience where possible, and as it evolved, bringing it into like more of a mobile or device kind of driven experience. But in the beginning, it was more about, you had a standard activation fee. There was normally a monthly fee associated with it. And then there were even transaction fees. So there were normally like 2 fee plans. You had to understand what was the best fee plan for the end consumer. The Netspends and the Green Dots of the world, like you mentioned, were kind of carving out the segment and creating what that value proposition looked like. Some of the early days included getting your direct deposit 2 days in advance, which was at the time, really, I would say kind of ahead of its time, really. So it was a big draw. There were higher interest savings accounts that were tied to some of these prepaid programs. So it was anything that you could do to try to differentiate versus what traditional banks were offering, but still make the folks that were using these products feel financially included. So we spent a lot of time there. From there, it kind of evolved. I think where it really started to gain popularity, candidly, is when some of the big box retailers got involved, like a Walmart, for example, and said, you know what, we can offer this to our end consumer. Demographic is fairly similar to a certain extent. And oh, by the way, we can afford to lower these fees. And that was a pretty dramatic change. I think if I think back on it, their fee structure was 333.
333. Was it
Yeah.
333? Yes.
Yeah, which was your activation fee, your monthly fee, and then your load fee. And that was kind of the structure. And it made everyone rethink their cost model, essentially their cost and profitability model. And so that was a big pivot. And I would say that probably from 2010 to 2015 or 16, the industry was trying to catch up with that. And some of the partners were smart. They would just partner with Walmart directly and go right to the source. And then others would try to figure out how to compete kind of, with those offerings in their own ecosystems. So that was a big change. I think the next big change, not to get too far ahead, was, what we consider the European challenger bank entrance. And I'm sure you're very familiar with that, having, spent a lot of time at Mastercard in your career and kind of seeing that evolution. They took the next step that Walmart took and went either to low fee or no fee in some instances, almost like an interchange only model, where they were focused on enhanced user experience, integrating in APIs to make it a more robust offering, and really trying to evolve the segment to attract new audiences. And then what we saw from there is they came over to the US. I wouldn't say they were all successful, because I think a fair amount of them struggled with figuring out the P&L, candidly, like how to be profitable in the US environment, managing to the regulatory requirements, et cetera. But I think what it did do is it started to attract a younger, more often banked audience, Gen Zs, millennials, the rise of the gig economy and the rise of digital issuance, to where it kind of raised the bar. Walmart had the cost impact, and I think the neobanks really came in and said, what can we do to the user experience? How can we raise the bar there? How can we bring in more technology, more APIs? And so it's really evolved, I think, based on those two or three changes in the industry. And the last thing I would say is that I think use case expansion has been another massive area. You used to have it where it was GPR gift for un and underbanked, or just for the holidays, or for a birthday, or for Mother's Day or Father's Day. And then you start to see, again, things come out of the gig economy. You see government disbursements that came out of COVID. You see incentive rebate reward really explode the last 4 or 5 years. And then you see some really interesting use cases in B2B and commercial. So it's really evolved over time.
Yeah, no, I mean, I think, if you think about the themes of what you just said, right? Like all of the things that happened, at the end of the day, there was this focused approach as it related to the underserved, unbanked, right? There was always the, 10 million number, the 40, 50, 60 million, depends on who you talk to, right? It was always bigger, depends on if you're looking for money or not. But basically, regardless, there was a need, right? So the big banks, others kind of decided that this was not a segment they wanted to bank. We were left with tens of billions of Americans. To me,
Yeah.
one of the things that I always say about prepaid, it doesn't get enough, like, how do we say it, attention, or in terms of like what it was able to do in potentially banking so many Americans, right? Everyone seems to forget that. And I think that that's one of the biggest, I would say, accomplishments, right? And Mastercard was definitely at the forefront there. And you mentioned government, there was Direct Express, there's different programs, right? There's so many programs out there that evolved, that came from this kind of concept of just, we need a unique product, right? Like, how do we differentiate this? And that maybe is to my next question, because I always get this question when asked by prospects or others, and in my career, done it a million times. Okay, why prepaid versus debit, right? Maybe you could talk a little bit about why would someone choose to go down a prepaid path versus, in some cases, if it's a GPR, where things are almost the same like debit, why would someone say, prepaid versus debit?
Yeah, and I think the answer to that has even gotten more complicated, kind of post-Urban, because you've seen some of the players in the market go, and I'll be really, the nomenclature is so important in these instances, but go graduate from prepaid GPR into like a DDA debit product, right? So I think, why, to take a step back, so why do organizations, or why do consumers pick prepaid? I think it's the instant need. So they've got an instant need. One of the innovations that I always thought really came out of the prepaid world was the concept of instant issuance. The idea that you could actually go into a retail outlet, do a quick KYC, know your customer, like through like an ideology type provider, and within seconds, based on a few pings, you could say, okay, Anthony, we know who you are. We've added your name, your date of birth, your address, and your social security number, and now we're going to issue you a card. So you could check all the regulatory and the KYC requirements, and you could literally have someone walk out the door with a payment mechanism, right? The traditional route was always, I apply for a credit card, I do it through my bank, maybe I do it online, and then I wait 7 to 10 business days to get something. And in many instances, I think one of the biggest innovations that prepaid made was, I now can have you instantly get a card product that you can use for electronic payment, both online and also at retail and in person. And so I think that was one of the things that drew people to prepaid. I think from a business standpoint, from a company standpoint, one of the biggest draws was the ecosystem, right? Like, I could just go find a processor, find a bank partner, and either sit as the program manager or have someone do it on my behalf. And the economics will obviously vary depending on what you pick. And I can be up and running fairly quickly. As you know, you can stand up a program in like 4 to 6 months if you know exactly what you need to do, standing up your bins, et cetera. But I think the turn on that, I think, was always appealing. I think for the end consumer, picking prepaid was more around the flexibility, the instant kind of gratification or issuance. And then, that ability to, and we saw this in a lot of research, the ability to kind of silo those funds, that it wasn't in a traditional bank account, it was with a FDIC insured institution, but something that was outside of like the traditional banking mainstream. And a lot of cardholders like that concept. They like the idea that they had their own bank, their own card that wasn't with a traditional FI.
No, I think, the instant issuance thing is actually really important. And I think, and you've noticed that banks have taken that on. It actually, I will give credit where it's due. I think a lot of these fintechs came up with a concept. And if I can give my ode to my old past payroll, the payroll card, right? Businesses, right? Leverage that very successfully, right? To get people's pay immediately, right? Because that was always the issue. Well, we have to issue checks, we have to wait. Well, now you can get your card, and by the way, your payroll person has it in their desk locked up and can register it for you, and you can use it immediately once it's loaded. I mean, that concept in itself changed a lot of people's lives. I mean, I have to say, right? Being able to use a card and do it immediately. So, so it's important. And I think some of the things you touched upon, I think I want to get into, like in certain terms of themes, because you talk about economics, right? And I think that this is something that I think is very important for everyone to understand, right? Typically in the past, right, as we started prepaid, a lot of it was based on fee schedules, right? There were, I mean, in some cases like 20, 30 fees, whatever it was. Um, Obviously through regulation and through scrutiny and through consumer demand, right? We've
Yeah.
seen in Walmart, I definitely think I give a lot of credit, change the dynamics of it, right? There's others that come in. Talk to me a little bit about the economics piece. And, from your perspective, do you think folks that are getting into this still, are they educated on understanding how a business like this needs to happen? Or are we still seeing kind of some of that, how do I say it, like, buyer's remorse sometimes when they go out with a product and they assume that it's going to generate revenue when in fact, without usage or anything, right? There's very little sometimes that can happen.
Yeah, I think the biggest mistake that is often made, and I've seen this again evolve over time, is that when you look at the percentage of fees that were generated that were strictly cardholder fees, it was pretty substantial.
Yeah.
And there was the idea that, you couldn't live or survive on interchange alone. I think that has changed. And I also think that companies have become more creative, more innovative around how they extend the life cycle of that cardholder. I think there were a lot of early learnings around direct deposit and the value of a direct deposit card holder. I think it forced companies to think about, how do I retain card holders and not just turn and burn in, say, a month or two. One of the things that we learned in my early days is that you could take someone that on average had a card for 3 months and turn them into a 24 to 36-month card holder if they were on direct deposit. But you couldn't just say to them, hey, you should use direct deposit just because it makes our economics better, our lifetime revenue. You had to convince them. You had to put new features and functionality. You had to layer in, say, like an interest-bearing savings account. You had to figure out different ways to incent them to want to stay with you more. Tie it to different sponsorship assets, work with your network partners to figure out like how to bring a holistic offering. So the economics have evolved over time. I think the other, there's a fine line. There's always that cost line. And I think some of the neobanks learned this when they came over to the US is, look, you want the most robust offering possible. But I remember in 2016, prior to joining Mastercard, when I was running portfolios, having to make a really significant decision as to whether or not we put EMV and contactless on a prepaid card.
Yes.
And that was the biggest debate, was around cost, the cost of the chip, the cost of the technology, and the cost per card versus the economics that it generated. So there was a lot of debate around whether or not it was the right time. And as you know, and a lot of folks that are listening and watching right now know, you only have certain windows to kind of make those enhancements. You go out with an enhancement like that, and you might not do something like that based on your print production run cycle for years. So it's kind of like you either do it now or you wait until the next production cycle, which could be years away. We actually worked with Mastercard and did a ton of research into the landscape, both in the US and Canada, to understand, is the market ready for it? And then can our P&L support it? And what we found is that when you add these types of features and functionality, you will see greater usage, greater retention, more likely to sign up for direct deposit, better peace of mind around security with the card. And so it was the right decision, but it was a very informed decision that we made based on research and taking a look at the market landscape, what the competition was doing. We were definitely ahead of the curve, but it was the right decision. On the flip side of that, I think at times you can go all in on the technology, the mobile experience, having a card that is maybe some kind of interesting material that is going to cost some more money. but are you going to see that return? So there's a balance there.
Yeah. Yeah, I agreed. And, for someone like myself, having to make that decision and make that pitch where, you have millions of cards outstanding, you have instant issue cards, which can't be, but, you have all these things you have to think about. One of the things that I always say is that, you have to think of things in terms of the life of the card, not necessarily at that time. Of course,
Yeah.
at that time when you have to spend 50 cents, a dollar, dollar 50, whatever you needed to reissue or to send or to add a chip, right? And at the time, EMV, and then even contactless is an even bigger cost. But I do think that, what I always say and the advice I give to clients is those are the types of things that are going to make someone use the card more. They're also, one of the things we forget is that part of the reason what people want is to feel like they have what others have, right? It's an American society psychological thing, right? If I see someone that has an iPhone, they're tapping with their phone, if I can't do that, I feel like I'm left out. And
Yeah.
so it's one of the things that, and why neobanks have been successful is they brought themselves to make it look and feel like you have, a traditional bank account, but I think with more bells and whistles. So I do think that that's definitely something that I'm glad to see, we've evolved from having those discussions about whether to issue a chip on a card to now thinking about, okay, there's discussions about like additional services and add-ons, right? That could be a question, whether they bring value. Yeah. I'd like to talk a little bit about other segments if we can. And so I want to get into commercial because this is one thing that definitely intrigues us at Cross River, thinking about this space and where you've seen and maybe, talk a little bit about where you think the market's going to go as it relates to commercial use cases. And what, maybe if you could talk about that for a second.
Sure. Yeah, I think it's really been an area of prepaid that has accelerated significantly over the last few years. Commercial for us can mean anything from incentive rebate reward programs, freight programs, a lot of the things that people don't really think about day to day. And so what we've seen with commercial is that the use cases have really propelled or accelerated the growth. There are new ideas every day around like how to do different B2B opportunities, how to accelerate commercial. The interchange is also better on the commercial side, so it's compelling from that standpoint. It's something that we have looked at and said consumer over the last 2 or 3 years has kind of normalized. I'll use that term since COVID. We saw a pretty significant acceleration in consumer spend, a lot of that coming through government disbursement onto these prepaid cards. But what we've seen in more recent years is growth in commercial and healthcare. And I think, again, that just goes to the number of different use cases that are available. Commercial, for us, even in our world, means payroll, like you had mentioned before, right? So I think payroll was kind of one of the original kind of commercial use cases we looked at, but it continues to evolve. We've got a number of incentive rebate reward programs we do with key partners. And then we're also doing, like I said, anything from freight and logistics to class action lawsuits. So it kind of runs the gamut. The really interesting thing is there doesn't seem to be a shortage of new ideas around use cases. And I think a lot of that is what you had mentioned earlier around just, the cost of cash, the cost of checks, the cost of having to move money in traditional ways versus, more innovative ways that are faster, that are cheaper, and that are actually a better experience for the end consumer or for the organizations that are leveraging it.
I mean, I think, no, thank you. And I think that's, I think we're seeing the same thing as we talk. And I love the creativity, whether you call it innovation, creativity, that's a different discussion for another day. But, the creativity of using existing products and what people have been able to do, especially in the fintech space, I mean, it's been incredible. And it is every day you come in, you're like, oh, I never would think about that. That's pretty cool, right? And and can we support that, right? Regulatory wise and from a network perspective, I do think that those are definitely areas, and again, one of the areas that I think is to me one of the most innovative is earned wage access, and and I want to get your perspective because many times it involves a prepaid product or account of some kind, which has been great as well. And so want to get your perspective on what you've seen there and kind of, what that has done, I think, to Mastercard as a whole.
Yeah, I'm glad you brought that up. Earned wage access to me is one of those things that has kind of come into the industry and I think could be a significant game changer. And I think of EWA and I think about the early days of, early direct deposit. And I felt like that was kind of just the starting point of where this was going to go. What we've seen from partners that we work with is they are positioning EWA as a significant and unique differentiator, right? That ability, that freedom, that flexibility for the employee to have access to their earned wage, at any point throughout the day. And again, through, their mobile device. So it's so convenient. It's literally access to your payroll in your hand. I think it's one of the most significant differentiators within the payroll space, candidly, in probably decades. It's outside of going electronic, going to a card versus check.
Yeah.
I think this is the next evolution. I know there is some regulatory scrutiny around, like, is this considered an advance? And we can have that kind of conversation and debate. I think the way that it's been structured, it's a convenience play, and I think it, from a consumer standpoint, they place a lot of value on it. We were in the early kind of days of this. We worked with Uber and actually Green Dot on a pilot for drivers. You might have been involved in that, and when you were here.
It's familiar. It sounds familiar. Yeah.
Yeah.
I was actually at Green Dot. Yeah.
Yeah. And I mean, that to me was kind of the first wave of EWA. What we've seen more recently, which I think is really exciting, is payroll providers actually including that as part of their bundled solution.
Yeah.
So they're really leading with that as a way to differentiate in the marketplace. And I've spent time with them at their conferences and when they engage with HR and with accounting professionals to try to sell in these solutions, and payroll professionals as well. And they lead with EWA. Like, that's a big selling point right now. So, I mean, I think it's a game changer. I think it's been incredibly innovative for the segment. You're seeing more and more that are either coming in as solely an EWA provider, or they're layering it into their existing payroll offerings. Yeah. So I'm all in on EWA.
Yeah, I am as well. I mean, I'm hopeful and optimistic that from a regulatory perspective, things will be resolved and made clear, because I know from my experience, and whether it was Uber and being at ADP and other places that I've spent, and also here at Cross River, the value that it brings is beyond comparison. It changes, again, I don't want to exaggerate, but it's not an exaggeration. It can change people's lives. I need money. What was happening in the past, they were getting, ridiculous payday loans. They were borrowing. They were doing things that they had to because they had to survive. These are the types of things that help people manage their money. And why wouldn't we be in and try to find ways to do it? And I think we've done, as an industry, a good job. I think we have a ways to go, because I do think this has to be something that is available to as many people as possible, in my opinion.
I agree. I think one of the things that I'm most proud of is that we get to work as a team with partners in this segment to reduce the cost of access to funds, to the end consumer. And that's been through money movement. That's been through innovations like EWA. We're not, we work with these partners to help power those solutions. You know how it works with the networks, where we're figuring out where we can add assets and where we can layer in technology, whether it's through, our cyber and intelligence fraud prevention tools, or, our solutions on the data and services side. We're trying to figure out a way to build out as robust an offering as possible. And we see something like EWA, an opportunity to financially include more people, which is a massive goal for Mastercard, as you know. It's a very exciting opportunity for us.
Yeah, and I don't want to, ignore or forget about what I think is another very important segment, right? Which is, and if I shift here to government in kind of public sector, I mean, Mastercard, obviously, I believe Direct Express is the largest in the world. Am I correct?
It is.
Yeah. So it's the largest, public sector program in the world. You obviously also have supported other state programs and everything else. Talk to me about that, because there's a couple of things I want to ask. One is, obviously there's been, it continues. It's one of those things. It's like taxes and everything else. People have to be paid. Social Security's there, right? People do it. But talk to me a little bit about, are you seeing the eventual, and again, to whatever extent you're comfortable talking about, the extent of these solutions eventually becoming more consumer friendly, right? I think Direct Express has definitely added benefits and features, but, what are your thoughts about that? And, do governments play a role in potentially helping to bank, or do you think or are we seeing that now in a different way? Because in the past they were like, no, we just want, we give your money and go away,
Right.
do whatever you need to do. What are you seeing there in terms of trends, if you can share?
Yeah, no, absolutely. We're very proud of the work we've done on Direct Express. I think again, it was very much ahead of its time in the sense that it was pretty rare that the government was comfortable doing an electronic payments program of that scale. And so to be able to work with Treasury on the Direct Express program, I've personally been involved with it, closely the last 3 or 4 years. It's something we're very proud of, but I think it's important because I think it demonstrated to the industry that we can work with government and public sector to enable programs like this. And not only that, what I think it did is it inadvertently instilled a lot of confidence when a world-changing event like COVID happens and the government needs quick solutions. I think the initial reaction to many of the government agencies that we spoke to was, well, we're just really, really worried about pivoting from checks right now. This is not the time to do it. And we were able to say, look, there's this program, there's Direct Express. We've been operating this for years now. It's a very reliable program. This is something that you can leverage. Not only that, but digital issuance has come a long way. So we can issue virtual cards and they can get to the end consumer very quickly. And then if you want a physical piece of plastic, we can have that, be a fast follow. So I think what Direct Express did is it really paved the way for other new opportunities. COVID arrives, they needed to do disbursements. They worked with many of our partners to get funds out. And it was something that I think really proved itself. And you saw that in the spend acceleration and also the re-engagement kind of after the fact. So where I personally saw it, and our government folks would certainly agree with this, is that not only at the federal level, but at the city, the municipality, and the state level, we really started to see new opportunities come out of this. And anything from Medicare and Medicaid, we did some vaccination incentive work with some of the states. There was a lot of different opportunity that was created, and we had a track record through Direct Express to demonstrate that it could be done.
Yeah. No, I mean, I think that, and again, examples that we just went through, right? Direct Express, you have the direct to consumer, you have, payroll, you have what it comes down to. And I think, what's interesting about this is you're talking to potentially the same person, right? There could be one person. And I always say, whether, if you agree or not, there's no silver bullet to address the needs, financial needs. And a lot of times, not just in prepaid, this is in general, and I always find that companies or institutions that diversify and find different ways to distribute are the ones that tend to be more successful because we all think different, right? We're not robots. We don't all go in the same place. We don't all do, right? So, I that was always one of the things that I found fascinating is that you're banking people, and Mastercard being obviously at the forefront, working with partners like banks like us and program managers and processors, right? To really drive and bank people and doing it from all the angles. And I don't think there's very few products that could do it the way prepaid can. Would you agree?
I completely agree. It has the ability to be used in so many different use cases. There's flexibility in the solution. There's the ability to apply it to a number of different product types. Like I think about the number of product types that we have just within the prepaid segment when we work with partners. I mean, it's become a very long list, and a lot of that has been driven by innovation. It's also been driven by things like sports gaming and gambling becoming legal. As an example of a use case that couldn't be touched, like 3 or 4, or 5 years ago. But once it becomes legal at the federal level and at the state level, that's a new opportunity for us. So there's really not an area that we are not able to pivot to as long as it meets our franchise requirements. And trust me, we vet all kinds of creative, unique ideas, as I'm sure you do across River Bank. And I think as long as we are within that regulatory framework, if there's not a product type that exists, we might create a new one, depending on what makes sense for us and for the partner and for the regulatory requirements. But yeah, I have yet to see a use case where we said, you know what, we don't have a solution for that. We figured out a way to pivot and develop something together.
Yeah, no. I have a couple more questions, and I think one of them is, how has kind of the change from a millennial to Gen Z, or even Gen X and the boomers and everything else, like really, how's that changed the appetite of this product, or is it just kind of evolved into different needs? Like, want to get your perspective, because you've been here since, 2008 to now. It's enough time, right? Like, and I think, those of us that have been in like around the same time, to me, the needs, I think, are somewhat similar, but I think there's additional things, right, they're looking for. So maybe touch upon that if you can, like what Mastercard has seen in terms of like that generational change and what it's done to the
Sure.
prepaid space.
Yeah, I would say the instant gratification dynamic is real. I think
Mhm.
within those generational segments,
Yeah.
they are expecting things to move quickly, enhancements to be made, making a much more interactive experience. One of the coolest things I've seen in the last 3 or 4 years, and again, the neobanks really deserve a lot of credit for this, is they were integrating APIs like on a daily basis. So, you would say, oh, we want to do a new feature, a new functionality, and the scope was like 5 months, right? For a project, and that potentially could be fast. What we were seeing from some of these neobanks is they were capturing real-time feedback, through social channels, through some of the feedback directly to their customer service frameworks. And then they were developing new features and functionality within days or weeks just through APIs. So getting that real-time feedback and basically saying, okay, we hear you, and now we've already made this adjustment, and now there's a new release. Download the later, or take the update on the mobile app, and now you have this feature functionality that you literally didn't have on Tuesday, but now have on Friday. We did see it move that fast, and so I think that's the expectation really, got accelerated around what the ideal customer experience was, and if there were opportunities for enhancement, how quickly they could be made. Cost model, obviously, I think Gen Zs and millennials are okay, paying for something if they see the value in it. I don't think that that's the issue at all. I think they just want to make sure that they see the value. They were also accustomed to, credit based rewards programs. So I think we're all as an industry figuring out whether it's merchant funded offers, or it's seeing if the P&L can actually, accommodate some type of rewards program. That's another consideration, because these are very smart, very savvy consumers that understand their rewards system, how to work it to their advantage, and they like the feature functionality and the utility of prepaid,
Yeah.
but expect that same kind of user experience from a credit product. So that's where the economics obviously aren't nearly as good. So
Yeah.
we've got to get creative there.
Agreed. No, and I think that's part of like the diversification piece that I always, preach to some of our clients, is diversification is going to get you to the point where if you look at things with multiple products and angles, right, you are able to be more creative, right? Otherwise, if you're a single product, you're faced with whatever the economic situation is. You can't change the dynamics, right, of the network and what happens. Last question, and I would love to get questions that were sent in. Advice, like what advice would you give? So we're launching prepaid Cross River as a bank. There are, there's still prospects out there. There's companies looking, for solutions. What would you suggest, in terms of some things to look out for? And then again, tying up, all the trends you kind of talked about earlier.
Yeah, a couple things come to mind, and not in any particular order, but they just kind of came up right away. Is an emphasis, as I know you guys at Cross River have, on compliance. The regulatory environment, I would say, has tightened in recent years, and being mindful of where you're at with the Durbin threshold, I think, is incredibly important. The other thing is just fraud, and just being buttoned up from a fraud standpoint. We really stress to have, we have a number of mandated solutions within cyber and intelligence at Mastercard, but we also have optional tools that we encourage our issuers and our processors to take a long and hard look at, depending on the use case and the type of products that they offer and the likelihood for fraud. I think having that buttoned up is essential in today's environment. I would also say try not to be too much. I think it is, awesome to be able to operate or offer a number of different use cases, as long as it kind of fits within the niche of the company and the expertise of that company. But some of the most successful ones just had a really good idea that no one else could replicate, and they just ran with that. And if they were to able to layer on other products or solutions after the fact, that's fine too. But just try not to boil the ocean. Just
Yeah.
adhere to the regulatory environment. Protect your environment, and just try not to do too much. Just do what you're really good at, and customers will come to you.
No, I appreciate that. And I think everyone listening will appreciate that advice. We are now at the point where we could take some questions. So just asking if there are folks that have questions. We did get one question, and I think it's a pretty standard question on, can a partner, can you partner directly with Mastercard to issue cards, or do you need a bank sponsor, like a bank sponsor? The answer is you always need a bank sponsor, but you obviously can partner with Mastercard. There's various reasons to do so, right? You do need a Mastercard to help you, as well as you do need a bank and a processor or program manager, depending on what you're doing. So hopefully that answered that question. Are there any other questions that we have? Let's give it 1 minute and we could take a look. Nobody has questions. Okay. Maybe the last thing, George, as we wrap up, one of the things, that I would say, maybe if we could go back a second, because I think there could be some questions on, I want to get back to the debit decision of debit and prepaid, right? And in particular, maybe, you mentioned some things associated with like use cases, but I want, if you could get in more details, because there are some things like, for example, there are, limitations, like limits or things or controls that can be done at prepaid or debit. Maybe you could talk a little bit about that. That might be helpful.
Yeah, I think where it started was, again, going back to Durbin and the ability to offer overdraft. And I think that was where you started to see a bit of a split between traditional prepaid GPR products and now these DDA debit products. The DDA debit products could continue to offer overdraft, and that was kind of the initial entry point. If you wanted to stay on the prepaid side, that was fine. The GPR candidly functions for the most part almost identical to the way a DDA debit does in kind of its framework and structure, but you can layer a bit more onto like a DDA product, like overdraft. There are certain insurances, certain benefits that can only be applicable to a DDA product versus prepaid. But what we've seen is that, and there is a slight interchange gap there that you have to take into consideration. Prepaid economics are slightly better. They meet most of the use cases and the expectations of the consumers. So unless there's a really specific need, that would maybe be my advice point number 4, is don't go DDA just to say you have a debit product. Like, make sure that it actually makes sense and that that's what your consumer really wants. Because what I've seen is in a significant percentage of the programs that we've looked at, the economics are probably slightly better on prepaid, and they could have gotten away with that type of offering. And I shouldn't say get away with, but I think they could have delivered or met or exceeded expectations in order to have a very successful program. There are instances where DDA debit is just a requirement because of what they're trying to build and what the value proposition looks like. But in many instances, prepaid will do the job and then some.
Yeah, great. One question we got is on cross-border. And, maybe in general, because we did talk about the, European companies or other, non-US companies coming into the US attempting, or some have stayed, some haven't. But also curious on, any trends in Mastercard seeing in terms of just global, using them for global payouts and even maybe issuance, right? Like, are there instances where, companies are using them to pay folks in other countries or pay other entities? Like, curious on what you've seen there.
Yeah, so we talked a lot about the European entrance into the market a few years back and what that did to the landscape. I think the next big game changer there would be what we're seeing from companies that are either based in Latin America or are operating in the US, but have a large base that is coming from another country into the US. And so we're working with a number of partners on cross-border programs. We're seeing corridors like Mexico, as an example, is an incredibly popular corridor, and many other Latin American countries where they're looking to have a standard prepaid GPR product in the US, but the ability to send money back home, essentially. And so you've seen a number of entrants in the last 18 months that have come in, established a program based in the US, leveraging cross-border functionality and money movement to be able to send money home, and then still obviously be able to use that as an everyday card solution in the US. So, I mean, we've got, gosh, 5 or 6 right now that we're actively working with that are either live or about to be live. And it's a big focus area for us at Mastercard right now, like how we make sure that we've got the right solutions in place for these different types of money movement with cross-border.
No, thank you. I think that's fantastic. And again, I think that definitely has been a trend that will never go away, right? We have folks we have immigrants coming in. Certainly they're looking to help their families. They come here to work, they're sending money back. And I do think there's been definitely a lot of focus on it, but again, it's been covered on different angles. And I think prepaid certainly can be one of those, right? That could potentially be leveraged. Last question.
Yeah, and just to finish that thought really quickly, it used to be you'd go in, you'd fill out a form with Western Union, send your money, and now again we're bringing that experience onto the card, and a lot of these providers are doing it based on the corridors that they have expertise, or they know they have a fairly sizable audience.
Yeah. It's another area I think would be two. Actually, I have 2 questions now. Sorry, I lied. We didn't talk about taxes, right? And I know that that's been a big area as well, like tax returns and everything else. Anything there that you've seen, evolve, I guess, maybe since, many programs such as the TurboTax and the others of the world, right? Jackson Hewitt and others, like anything there maybe you want to add that you've noticed?
Yeah, something that I think we all have to be mindful of is that, prior to 5 years ago, I'm going to say basically before COVID, maybe even a little bit before that, we were used to a very consistent schedule of tax season. We knew when the filing deadline was, we knew when most of the cardholders in our ecosystem were going to file and get their returns, and in some cases would even do advances. So you knew your window was essentially like late November into like end of February. And if you hadn't captured that opportunity by then, you probably lost the window. So everyone was always geared up for those 3 or 4 months. Well, in speaking to a CEO at one of the largest tax providers in the US and around the world, one of his comments to me was, we haven't had a regular tax season in 5 years. We've had COVID, we've had child tax credits, we've had extension of filing, we've had a number of folks that just didn't file that in the past had filed. So now you're not seeing that condensed window. And now a lot of these tax providers are trying to figure out, how do I extend my season from a cardholder standpoint? And how do I manage to this new calendar, which every year could be different? So I think that's dramatically changed the way we view the tax segment for us. It's incredibly valuable for us at Mastercard, and we have a number of high-profile partners that we work with, and the volumes are these are big programs. But they were normally in a confined window that you knew exactly when it was going to start and when it was going to end. And it's gotten a little blurry the last 4 or 5 years.
The last question I have, which is I've seen a few questions on commercial and everything else. And, we have partners that use commercial credit cards, right? We just have some that commercial debit. I think the question is, do you see prepaid? How do you see prepaid either complementing or replace, like being a separate product line, right? With some of those, right? So if I'm a corporate, obviously commercial credit interchange benefits, you have to say, but just from why commercial prepaid? Like, I think is the question. We know the use cases, expense management, other things, but why would you choose a commercial prepaid versus maybe a commercial credit, or can they actually work together? What are your thoughts?
I think they can actually work together. I think in some instances, commercial prepaid makes more sense. It's either, not necessarily economics to your point, but it is how quickly you can stand up a program. The ability to not have to take on the underwriting responsibility is a pretty significant decision-making, factor. if I can't underwrite for a credit program, I can at least fund a prepaid program and manage, it commercially that way. The one thing that I'm seeing that I think is going to be interesting is that at some point, if you're working with a partner, you have to acknowledge, as much as I want the commercial prepaid solution to work, we may have to consider credit here, and that's okay. And as you know, the worlds were so siloed at times where you couldn't imagine working with a prepaid partner and all of a sudden saying, hey, let's do credit, and being able to support that. But now, because the lines have blurred so much, I think as networks, I know at Mastercard, we've gotten much better about supporting whatever that customer needs. So if they want to do commercial prepaid, we're all for it. And our team will support that. If they are interested in commercial credit, say like a small business credit product, we will quickly bring our small business and our credit assets to bear and say, how do we make this work holistically? Get more creative around the brand agreement, because they were always segmented by product type, and figure out a way to make it work. So we don't want to lose that business opportunity. So where we can use commercial prepaid, we will, but we're happy to quickly pivot if we need to.
No, that's great to hear, because I think it speaks to solution selling, right? Versus like itemized, like I call it organization selling, right? Like I worry about this, but I think it's a good approach, because you are trying to solve, at the end of the day, you're talking to the same company who has different needs, and you provide all those needs right through yourselves and through partners. So it's a great approach. And I think I've certainly seen it too, in terms of my interactions with Mastercard, for sure, in general. We are wrapping up, George. I just want to say thank you. Any last words, anything you'd like to add, before we end this?
I just want to say thank you again, Anthony, and the Cross River Bank for the opportunity today. I really enjoyed the conversation. This segment is not going anywhere, and it's awesome to be able to talk about the evolution over the last couple of decades and how much more potential it still has. So thank you. Appreciate it.
No, thank you. And thank you again to everyone who listened in. This session was recorded if you want to listen in, because there's a ton of great stuff George talked about here. But again, want to say thank you to Mastercard, to George, and thank you to you all, and look forward to the next conversation. Have a great day, everyone.